Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 29th, 2025, and we're diving into Alphabet's third quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, Alphabet has just announced their Q3 2025 results. Can you give us a brief overview of the company and the highlights from this report?
Thank you for having me. Alphabet, the parent company of Google, has reported a stellar quarter with revenues reaching $102.3 billion, marking a 16% increase year over year. This is their first ever $100 billion quarter, driven by strong performances across Google Search, YouTube Ads, and Google Cloud. The adjusted EPS came in at $2.87, significantly beating the forecasted $2.26 by analysts.
Revenue and profitability overview. Let's start with the top line. Alphabet reported a net revenue of $102.3 billion for Q3 2025, which is a 16% increase compared to last year. John, what are the key drivers behind this impressive growth?
Absolutely. The growth was primarily driven by double-digit increases across all major segments. Google Services, which includes Search and YouTube Ads, saw a 14% increase to $87.1 billion. Google Cloud was a standout performer with a 34% increase, reaching $15.2 billion. This robust growth in revenue translated into a net income of $34.9 billion, up 33% year over year.
That's impressive. How did this impact their profitability?
Operating income increased by 9% to $31.2 billion, with an operating margin of 30.5%. Excluding a $3.5 billion fine from the European Commission, the operating margin would have been 33.9%, highlighting strong operational efficiencies.
EPS performance and analyst expectations. John, Alphabet's adjusted EPS of $2.87 has significantly surpassed the forecasted $2.26 by analysts. What factors contributed to this earnings beat?
The EPS growth of 35% year over year was driven by a combination of strong revenue growth and a substantial net gain of $12.8 billion from non-marketable equity securities. This gain was a major contributor to the bottom line, alongside the operational efficiencies and cost management strategies that Alphabet has implemented.
With 16 analysts forecasting an EPS of $2.26, this is quite a significant beat. How might this affect investor sentiment?
Beating analyst expectations by such a margin is likely to boost investor confidence and could lead to positive movements in the stock price. It demonstrates Alphabet's ability to not only meet but exceed market expectations, which is always a positive signal for investors.
Strategic initiatives and future outlook. Moving on to strategic initiatives, Alphabet has been heavily investing in AI and cloud services. Can you tell us more about their progress and future outlook?
Alphabet's full-stack approach to AI is showing strong momentum. The Gemini app, for instance, now has over 650 million monthly active users. Additionally, Google Cloud ended the quarter with a $155 billion backlog, indicating strong future demand. The company plans to invest between $91 billion and $93 billion in capital expenditures to meet this demand and capitalize on growth opportunities.
And what about shareholder returns?
Alphabet has declared a quarterly cash dividend of 21 cents per share, reflecting their commitment to returning value to shareholders. This, combined with their strategic investments, positions them well for sustained growth.
Key takeaways. In summary, Alphabet has delivered a record-breaking quarter with strong revenue and earnings growth. Their strategic investments in AI and cloud services are paying off, and they continue to return value to shareholders through dividends. John, any final thoughts on Alphabet's investment prospects?
Alphabet's performance this quarter underscores their strong market position and growth potential. With their continued focus on innovation and strategic investments, they are well-positioned for future success. Investors should keep an eye on their AI and cloud segments, which are likely to drive growth in the coming years.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Alphabet's performance in the comments below. Until next time.